we have a minimum investment of only $10,000. So we have $10,000 investors trying to use it as a checking account or regular savings account like a money market, and they would put money in and then 2 months later pull it out.
You mentioned a little bit of liquidity. So let's say someone put $1 million into Fund 6 and they're getting that 8%. Would that be in 1 year? Would that be $80,000 exactly? Walk through that number. And then number two, let's say they wanted to get out, in 6 months. Would that mean they'd only get 4% in that year? Talk a little bit about how that might look, just practically speaking.
Yeah, let's talk about that lockup first. So in Fund 5, there's no lockup. So if you think you might need the money, then you can get it back at any time. With the exception of we're not a bank. We don't have unlimited resources. So we do take the money in and put it out into loans secured against real estate. So we may need to wait for a loan or two loans to pay off to free up the capital to return the money. So there's a little delay there. Fund 6 is similar, except for we do a 9-month lockup on that one. And this is the first fund we've ever had any lockup period at all. But what we were finding is in Fund 5, we have a minimum investment of only $10,000. So we have $10,000 investors trying to use it as a checking account or regular savings account like a money market, and they would put money in and then 2 months later pull it out. And it just became such a administrative headache for us. So we decided to put that 9-month lockup on Fund 6. Now, to answer your question about the rates, yes, if you put $1 million in, you would have an 8% return. So over a year, it'd be 80,000, unless you compound interest, right? Because if we distribute 8% in month 1 and you don't take that money out, you leave it in, then you're going to be earning 8% on the million plus the distribution in month 1. And then every month you'll just earn interest on interest. So it'd actually be a little higher than the 80,000 at the end of the year if you do the compound. And then of course the profit share is there as well. So whatever the profit we make, you would get 70% of that. We're targeting, and this is based on 15 years of experience, we think that the returns for the year will be between 9 and 10%.
Excellent. Hey, fantastic. We're talking with Kevin Amolsch and PineFinancialGroup.com. We're understanding how to make passive returns from debt.